May read on producer price index up 0.1 as expected. Remove the all-important food and energy up 0.2 as expected. If you look at trade month over month, up 0.4, double what's expected. Final demand year over year 1.8, a little light of expectations. And year over year food and energy up 2.3, perfectly as expected. All of these numbers pretty much in line outside of that trade number. And if we look at the revision side, there are none. Sequentially, a couple things stand out. On that final demand year over year 1.8, that's 0.4 lighter than our last look. The year over year data, coming in a little bit light just on a comp, but generally as expected. We don't have any robust inflation out there, and interest rates are coming in a bit hotter depending on which maturity. Usually the last couple of sessions of last month is the last time we're at these levels. And when you look at what's happening with regard to foreign exchange, the dollar index is definitely idling at lower levels than expected. Maybe that's the general outlook, that we're not going to see a lot of interest rate hikes. And that seems to be the key point. It's interesting, Joe, every major publication, a lot of research, that this rally is just all about the notion that the Fed's going to lower rates. I doubt if the National Federation of Independent Business optimism was totally affected by that. And when the Fed meeting comes and goes with no interest rate cut, I doubt if the markets are going to give anything back to you.
I noticed that NFIB thing too, Rick. There's so many. I mean, it's like there's two kinds of people in the world: people that think we're on the cusp of a recession, and people that think things are great. I don't know. Someone's going to be wrong, I think.
Well, that's life, though. There's always people that know and people that don't know.
Yeah, they don't know what they don't know. Yeah, we'll know within a few months, but then we'll be worried about what happens after that.
Right. Because if you're going to worry, you're going to worry constantly. People talk about the rising uncertainty.
Rising uncertainty.
But we're always uncertain. Nobody knows what's going to happen tomorrow.
Period of certainty? I don't remember.
Well, you can have a period of certainty where you think you know what's coming. It turns out you don't. There's always something that surprises you. Rick, thank you. Go ahead and stay with us. Let's get some more reaction to these numbers today. Joining us right now is Steve Liesman, and, of course, our guest host for the hour, Stephen Moore from the Heritage Foundation. Steve, what do you think?
This is good. Inflation under control. There's been a bit of a separation from the producer prices and, say, consumer prices or the PCE core. Producer prices sort of held up relatively well. There's a weird number in here that I just want to put an asterisk around. We got to come back and look at this later. There's this thing called trade services. And it's like the profit that is made by middlemen or middle people, I guess, whatever you want to call it.
Is that number down?
It's down 0.5 point. So one thing we do is we look at the number X food, X energy, and X trade services because of the weirdness and the volatility of this number.
Middlemen, I would guess, get squeezed first.
They get
dealing with tariffs coming in or higher prices in different places.
The trouble is it's a new entry into the PPI when they redid the PPI a couple of years ago. Nobody knows quite what to do with it, so we get rid of it to kind of get a look at outside. And we get rid of all that, and prices are up a little bit more. It was 0.4 rather than the 0.2 that was reported as the core. So I'm not saying there's inflation. I'm saying let's just footnote that and come back and look at it a little later to see what happens. You have a pretty firm on the producer prices. And I went back and I looked at CPI over the long haul, say back to 2012. It's between 1.5 and 2 on the PCE core, the number the Fed looks at. And it comes a question as to how much tweaking the Fed ought to do. $20 trillion of goods and services are produced, right? And in that time frame, for the last 6 years, we've had price rises between 1.5 and 2%. How far off of its mission is the Fed really? Now, I will tell you the Federal Reserve has two schools of thought on this. One is the kind of, I'll call it the close enough for rock and roll school. And the other is we're persistently below. We ought to do something about it. And I get both sides of it. And to me, I think there's a middle ground of just sort of watching it and watch persistent deflation to the downside, but not get too concerned about a 0.5 point miss, even if it's consistent.